While most people were sleeping, the Supreme Court just made a move that effectively rewrote the rules for the global economy. Wall Street is already reacting, and the result is a massive liquidity drain that is hitting precious metals, specifically silver, harder than we've seen in years. In the next 9 minutes, I'm going to show you exactly why missing tariff funds and a sudden shift in corporate demand are creating a perfect storm. If you hold silver, gold, or even copper, you need to see the data I've just uncovered. This isn't just a market dip, it's a structural shift that could redefine your portfolio for years to come. What just happened is not a drill, and the mainstream media is completely missing the real story. The chaos began earlier today, when the Treasury Secretary's statement on missing tariff funds sent shockwaves through the market. We were talking about billions of dollars that were expected to stabilize the federal deficit, now officially unaccounted for. Why does this matter to you? Because it's triggering an immediate and violent repricing of the dollar. As the dollar's value fluctuates wildly, big institutions are dumping paper assets to find physical safety. They are in a desperate scramble to convert their holdings into something real, something tangible. But here's the problem. There isn't enough physical metal to go around. The vaults are not as full as they claim, and this sudden rush is exposing a massive vulnerability in the system. The institutional herd is moving, and they're all heading for the same tiny exit door. Now, let's look at the silver pipeline. You might have seen our recent report on Samsung's underground operation, stockpiling silver for their future production needs. Well, today, new reports suggest they aren't the only ones. We're seeing a staggering 30% premium on physical delivery from major suppliers like Hekla, and APMEX is reporting that the shortage isn't over. It's just entering a new, more aggressive phase. This isn't about running out of silver bars for retail buyers anymore. This is about industrial giants and sovereign funds trying to secure their supply chains. Adding fuel to this fire, China is about to go offline for 8 days for a national holiday. Historically, whenever the Shanghai Exchange closes shop, the COMEX sees a massive spike in volatility. We are currently just 9 days away from a potential COMEX break, where they may not have the physical silver to deliver on their paper contracts. Remember our analysis on copper outperforming gold? The same logic applies here, but with a critical twist. Silver has a dual identity. It's a monetary asset, a store of value, and it's an absolute industrial necessity. With the AI boom requiring unprecedented amounts of high conductivity metals for servers and infrastructure, the demand is skyrocketing. That graphene replacement theory we discussed yesterday, it's still years, if not a decade, away from being a viable alternative. Right now, the unstoppable industrial demand is creating a solid floor, preventing silver's price from truly crashing. At the same time, the monetary panic from the Supreme Court's move is creating the explosive ceiling. This is the squeeze everyone has been warning about, but today's court decision just hit the fast forward button on the entire timeline. The pressure is building from both sides, and something has to give. So, what's the move? What should you be doing right now? The banks are clearly planning something big for the next market open. We've seen an incredible $4.3 billion bet on silver today, all while the paper price was being artificially suppressed down to $72. This massive divergence, where the paper price drops but the cost to get physical metal in your hands rises, is your biggest signal. This is the telltale sign that the game is rigged and the smart money is moving behind the scenes. This story is developing at lightning speed. Subscribe to Nexis News as we track this hour by hour. The next 48 hours will decide the trend for the rest of 2026. Thanks for watching.